I just want to make sure people understand the range of where you invest. I heard
Right.
250 to $1 million
Right.
is generally the area.
Yeah.
Is that the same with you, Todd? Or
Yeah, we're, oftentimes people look at the angel groups as competitive organizations, and we're really not. And the reason why is because we as organizations, what we care about is whether your company gets fully funded. And so there's kind of a stepping stone, I would say, in Seattle where I say Alliance of Angels, typically the companies will go through Alliance of Angels before coming to Keiretsu Forum. Oftentimes on the same round and many times before. So Keiretsu Forum is really that next round. I'd say our sweet spot is really $500K to $3 million. We'll invest on the high side as far as $13 million was on the high side, which is an anomaly, I would say. But the Series A is really where we specialize.
Okay, so that gives you a sense of the kind of investment sizes. Let's talk a little bit about the people in the room. Geoff, if I go to an AOA luncheon and I see 20 or 30 angels around, who are these people?
Right. Well, 60, yeah. I mean, generally at the Alliance of Angels luncheons, we get about 60 to 80 people, 60 to 80 people there. I mean, it's a mix of people. I mean, obviously by definition, these are accredited investors, meaning that they can afford to make these types of investments. So they're generally people that have been successful, at their prior businesses, and now are wanting to give back or participate, in new companies, and generally find it fun to be doing this. And so there can be a mix of obviously here in Seattle we get a lot of former technology folks, so people that have made money at Microsoft or Real Networks or Amazon or many of the other. Definitely the former the Macaw Mafia. So all the people that made money from AT&T Wireless or any of the Macaw companies or VoiceStream, so or Western Wireless, and so you'll see a mix of software people, wireless folks, and again these tend to be pretty value-add investors if you can get them into your company.
Mm-hmm.
So.
The other half of our organization is actually made up of representatives of the venture community, and it's actually a really nice collegial group, and you probably find it a little different in the Bay Area, at least that's what my colleagues in the Angel Capital Association say, that VCs and angels are actually quite happy to co-invest together in this town. And some of the best deal referrals I get are from venture capitalists who see business plans across their desk every day, many of them far too early for their fund to get involved in, and so they send them our way. And also, on the flip side, I think venture capitalists can use sources like the Alliance of Angels to source deals that they might be interested in the next 12 to 18 months. So that's kind of a unique dynamic that we've really enjoyed over the years.
Okay.
Right.
So,
the Alliance of Angels does have a number of the large venture firms in town, including Madrona. When I first started attending the Alliance of Angels meetings, it was as a representative of Madrona. It probably goes back 7+ years ago.
Mm-hmm.
So.
what are the top 3 things you and your angels look for in a good investment?
Say leadership, and leadership.
Yeah, I mean, I think the characteristics of a good angel deal are similar to a good venture deal, and obviously the team is the most important, characteristic of the deal. Obviously the other ones is the addressable market size and competition, and these days time to revenue and profitability, and how much more financing you're gonna need, because financing risk has become increasingly important.
One thing I might add, and I totally agree with those points, is around the value proposition. There's, I think, an occupational hazard in the Pacific Northwest where we are surrounded by brilliant engineers and developers who occasionally have the risk of just falling in love with their own code without going out and talking to real customers. So you can't just be a solution looking for a problem. We're very much looking for something that's compelling, and that whether or not you're solving a pain, that there's an interesting brand or a positioning or, again, value proposition. So in addition to team and market and being capital efficient, you really have to be able to describe your business in a sentence. I think that's the sort of Michael Arrington litmus test. If I can explain it to my mom, you probably have something there. And that goes from Web 2.0 to bioinformatics.
I think we look for 3 things. We look for vision on the management staff. Do you know where you're going and why you're going there? We look for the business. Is it a business that you can describe and you can understand, you can get? And we look for the ability to manage. Far too often we see in early stage companies this concept that if I build it, they will come, and they won't. And so, what is the business plan, and can you run a business, not just build a product?
Yep.
And how long do you, I'm sorry, go ahead.
Just in your brochure, there's the 5 key questions that an angel wants to know from an entrepreneur, which are, we look for intellectual property, the CEO's background, is the company revenues, what's the market space like, and what's your valuation?
And how long do you expect a company to be along in the development of a product or a set of customers before you say, we're ready to, even if they have a brilliant idea and they have a great leadership team, where's the line of when you say, okay, I'll start putting some money down on this?
Sure. So I mean, one of the common statements you hear these days is that a demo is the new PowerPoint. You know, it used to be several years ago you could get away with just having, you know, a great team and an idea, and sometimes you still can, but in general, you know, you have to have something to show people and something that actually works. And you know, obviously, the closer you are to revenue, the better. I'd say from an angel perspective, you know, I have invested in things that were, again, they had a demo, right, but weren't necessarily selling something. And so again, this money was being used to, you know, kind of polish the product and then take it to market, you know, hopefully within the next few months, you know, or several months at the maximum. Even better, you know, are the deals I've been in where they already have revenue, and you know, and even then, as I said, you know, the market has changed such that you still get you know, angel valuations even with companies that are generating revenue now. Before the VCs will come in, you have to have substantial revenue and an ability to show that you can even grow it, you know, to more substantial.
In the past couple of years, our investment profile has been 20% at perhaps a functional prototype or a private beta phase and, you know, not close to revenue. 40% have been, all right, you're ready to launch that website. You're on the verge of generating revenue. And then the other 40%, they've at least got pennies coming in, probably not, you know, VC fundable revenue, but something of that nature. I suspect we're going to see a shift a little bit further along. Partly, it can be a little cheaper to build a company these days. There are all kinds of resources you can leverage that wasn't the case 2 or 3 years ago. You know, offshoring, outsourcing, open source, what have you. But again, because of the kind of risk-averse environment, we're probably looking for some kind of legitimate customer validation and transparency around that. We have, there have been companies that may have been interesting, but if we kind of felt like the entrepreneur was not being completely forthcoming around the status of product development or the status of their customer relationships, then, you know, trust is absolutely at the core right now. I mean, we have to absolutely believe in that CEO.
If I, Todd, do you want to make another? Okay. Let's say I'm successful. I make my pitch. 2 people in the audience at lunch at the tennis club say, "Yep, I like Myer's idea." I'm asking for $350,000. Let's say $400,000. How many angels are going to sign up? 2, 3? 2 or 3? And then what are these people going to do? Are they going to now move in with me? Are they going to be calling me every day? What happens? So help me understand once I won what I won.